Yo, yeah, man, it's been a while. Uh, as you guys can see, the time, you know, basically 2 o'clock in the morning. I got home probably an hour ago. I went out a bit, so I was meaning to make a video for a while now, regarding everything that's happening in the market this past 2 weeks. Um, a lot of rollovers and a lot of expectations that people have on certain pairs and what the market is going to do. But one thing you must understand is that, I would always say that a lot of people get wiped out during a period like this. People will say, it's time to capitalize, but this is when things get a little bit more difficult, because there's a lot more volume in the market, and again, like a lot of manipulation. So I'm gonna give you a sort of brief analysis here, okay, on NAS, US30, and gold. Okay, I'm gonna show you the sequence that I expected since the open on Monday. Today is Friday, I think. Yeah, today's Friday. Uh, Traded Thursday. Sells on US30, sells on NAS. As you can see, the prices is rolling over now. Okay, but let me give you a brief analysis here on these indices. Okay, now again, super complex. Okay, I'm telling you right now, there's been many nights, especially this week, a week before, where I just, I was studying, even at the level I would consider myself at, I'm still studying for hours and hours, day in and day out, because charts is very complex, and sometimes we want to make it easy for ourselves, right? Because, we kind of want quality of life, especially if you're going to be doing this for a while. But we have to understand that this is very complex. So for someone like me, I have a harsh engagement when it comes to like figuring things out, because I cannot sleep comfortably if I do not understand something at its full potential, right? So what I'm gonna do is I'm gonna show you guys exactly how I would just predict. Even though I don't predict prices, I sort of react and I take it from there, right? Through a sort of picture as to how you can figure out, for instance, sells for Thursday. I sold here, I think I bought here on NAS, and I was looking for buys on US30, I think right around here on Wednesday, but then my buy switched again, right? So it's a whole format of play around. But what I'm going to show you is how I would look at the candlesticks, okay, and then draw a picture as to what the candlesticks is telling me, because that is what is basically my guidance here as to what prices is gonna do. Okay, so let's start with NAS100. Okay, so what I'm gonna do is I'm gonna clear everything here, all my drawings. Okay, I'm just gonna do this. Okay, so as we can see, right, if we look at the daily chart, I'm not too sure how often people people actually use the daily chart a lot. I don't necessarily do too much, but even on the daily chart, you can see massive clutter here. Okay, in this area that I'm circling, and for countless of days, weeks, the market was just chilling here. Okay, and as we can see, obviously the overall outlook here is, of course, for the market to continue, but again, there's a lot of skepticism in stocks right now, because most of the money in the stocks is being taken out. So I'm not gonna sit here and say price is gonna do this, or price is gonna do this, okay, because whatever this daily chart is showing me is irrelevant to me. Okay, obviously I do not hold trades for a while, let alone more than a day or even longer than a session. Trades are closed before the market closes. So you can clearly see like the market was just jumping within here. Okay, very, very complex. If you sort of, what is price trying to do? Is it, if we sort of draw basic boxes here, is price between the support and resistance? And of course you can say that, but the way I see it, right, is if we look here, okay, this was Monday. This was Monday open, basically right here. The market had a massive open, okay, as you can see, Friday, and then prices, ended up here on Monday, the open. So it was insane. Anyone who was sort of holding buys, okay, obviously got wiped out just with this push down. Anyone that was holding, let's say, sells, maybe at these levels, of course, got taken out before the big impulse to the downside. And then, of course, anyone that was holding from these areas here down that I am moving, okay, are obviously all profitable, let alone their targets might get hit, okay. But this was the open, okay, and the expectation, you can just imagine, right, if price broke out of this box, this support here with this impulse, so many people would expect price to just continue to the downside. And just imagine how much people were selling at this area, okay. But then, of course, market did something else. It went up, took out these highs before continuing the rollover, okay. So how would I expect something like this to happen? Okay, what you need to understand is that if you look at what we call it, what's it called again? Sorry, it's 2 o'clock at once. My head is, I'm not all there. But if we look at the candles, okay, the market is drawing a picture. Okay, here, if we follow a path, okay, market is drawing a picture. Higher highs, higher lows, okay. And then if we look at this pattern here, from on the Monday open, here we have a high, and a high, okay. And all these highs are descending, okay, lower highs. And one thing you need to keep in mind, okay, when we're in a seller's market, this is also a high right here, okay. Well, when we are in a seller's market, for instance, if we a seller's market is higher highs, higher lows, okay. If we determine this pattern, a realistic format of this pattern that you see here is exactly like this over here, okay. Exactly, this is a perfect example of a seller's market. Understand that when you see this pattern, right, there is sellers getting involved in this market. A lot of sellers, more sellers than buyers, okay. And when price, let's say for instance, this is where price is, this is exactly where it was on Monday, the open. Do we continue the sell? I would say probably not. Why? Because if, let's say for instance, you can sell and price will continue to the downside, that's a possibility. But a very high probability is that the denominators know. Okay, let's say for instance, these guys are loading sells at these areas. They're not going to be holding their trades forever. Institutions is not greedy. Profitable traders are not greedy. They do take profits. Okay, and as price is falling and falling and falling and targets are getting hit, the demand, the supply starts to get less. Okay, less orders are now in the market, and then as people are taking their money, the price will start turning, okay. Right, and then of course they would also I have actually no idea how the the, the program works when it comes to retracements. There's so many different formats that can cause retracements, whether it be profit taking or uh, they buying again at this level to collect their their open trades. I don't know, but just understand that if let's say price is retracing, okay, before they're gonna continue that downward push, I would say that they would first come up and collect these highs before continuing to the downside. Very, very simple. Okay, this is not a hard thing to sort of grasp, because liquidity is what really fuels the price. Because as they came up, okay, collecting high, collecting high, collecting a high, gives them more reason to start loading over. Okay, now as a trader, do I take trades during this time? Probably. Okay, but there's still a lot of convincing factors for me before price continues to the downside. Like this, for instance, here we have a breaker structure right here. Look at all the lows on its way up, has not been tapered with. This is the first low that the market tapered with, and then price had closed below the low with this candle right here. That is the first indicator for me. Breaker structure. Do I enter here immediately? No. The moment that happens, you can see here's a high here, okay, and here's a high right here. Before they continue to the downside, they're first going to collect more liquidity. Even though these liquidity highs have been taken, okay, first they're going to create inducement. Inducement meaning whether it's going to be a candlestick pattern, the basic format of, let's say, for instance, a doji engulfing candle. Okay, this I would probably say is a good example of it. Engulfing, maybe three-way pattern, I don't know, but candlestick patterns is a facade. Okay, especially singular candles, because they use groups of candles to create execution realms. Anyway, as soon as that breaker structure happens, they push up, collect the higher liquidity, and then of course this one was not tapered with. But does the market need to push up and grab all the liquidity? No. The market just needs to grab one, and then boom, you can clearly see the market started to roll over from this point. I hope you're listening to what I'm saying after after them grabbing liquidity, breaker structure, liquidity, okay, your price starts to roll over. And when a rollover happens, okay, the only thing that can keep pushing this market to the downside is what I call demand and supply. Okay, so here's a 4-hour demand right here. Candle closes below, price taps the demand, continues to the downside. And again, we will find these areas on every single time frame. Okay, let me show you on the 15. Okay, yeah, market taps the order block, price pushes down. Price taps the order block, price pushes down. Taps the order block, price pushes down. Taps the order block, price pushes down. Taps the order block, price pushes to the downside. Okay, now again, if we look here on the 31, we have order blocks on all these time frames. Right, here's a 15-minute. Okay, if this market closes like this, for instance, we will probably have a hour order block. Yep, here, and then market can easily do something like this: tap the order block and then go down. Now, as you guys can see, I'm building a framework as to what this market is doing. Okay, just off of what I explained from the starting points. Alright, now my cells today on NAS is the same format I just showed you. Okay, first of all, timing is extremely important. Even though these order blocks can work any time of the day, I'm still not going to take the trades, right? But the concept is there. Let me see if I can delete all this. So let me show you my New York trade. This blue shaded area is the New York session. As you guys can see, third session Europe, 9:30, the open. Okay. If we see here on the 5 minute, I trade on the 5 minute. Okay. I do not trade on the 15, but I can use order blocks on the 15, 30, 1 hour, 4 hour, whichever one is closest to relevant price, right? So I'm going to the 5 minute. Very, very basic, very simple. Here the market opens. Okay. As you guys can see, look at this blue shaded area. If a trade for me does not pop up in this blue area, then I'm done. Alright, so it's basically 9:30 to 2:30. But in my time zone, it's 3:30 to 8:30. That's my window. Anything beforehand, I cannot enter here. I can only enter in the blue area. Okay. So look here. This is the opening candle, this blue one. As soon as the market opens, boom, immediately fetches this high over here. And remember, I'm trying to sell. Right, so before I sell on the open, there first needs to be a capture of liquidity. Okay. And because I'm looking for sells, right, based on the principles I explained, any liquidity would work during the New York. The 5-minute liquidity, 15-minute liquidity, doesn't matter. Okay. As long as the market fetches liquidity not exactly on the open, but any time during here, if it did not happen on the open. But for this case, this trade, the market actually fetched this high liquidity on the 5 on the open. As soon as the market fetched this liquidity, tap this 5-minute order block right here. Valid order block for me because it broke structure right here. Okay, with this candle. Liquidity order block tap, we could take the trade right here. As soon as the market closed below that level, stops above the high, and that was the trade, right? Very, very simple. Of course, I do not hold for this many hours. I do protect myself during the trade. 1 to 1, 1 to 2, 1 to 3. Doesn't really matter what the RR is, but if we just look at the reasoning behind this trade, very, very simple. Okay, here we can already see how price refused this 4-hour imbalance, started rolling over, and then again, traders like to, they want prices, they want to see price be perfect, maybe come to here and then sell, but that's not the case. Sometimes they just want 5-minute liquidity. They do not need a 1-hour liquidity or a 15-minute liquidity. That's maybe chilling right here. Okay, as you can clearly see, 5-minute is more than enough reason for price to fall. And then, yeah, NAS was basically the most complex compared to US30. US30 is basically all the same, performative actions here, as well as gold. So, in case of a gold, we were going the other way. Before pushing down, okay, actually, wait, this is the same. Because here was the open, price pushed up, grabbed the highs before continuing the rollover. Now, I do not trade gold, however, my archives does work on gold. My strategy does work pretty good, and the timings are different though. I do not trade gold during New York session, the stock exchange session. I can trade it pre-market and I can trade it during Asia, but I'm not trading gold right now. But I still do analyze and watch this pair just to make sure my archives is still working here. Okay, most traders, well, if you sort of I don't know, maybe looking at a 4-hour, of course traders do pay attention to support areas, resistance areas, and then as price is maybe impulsing past any one of these levels, they start to load their trades. Maybe you call it breakout trading, I don't know, but that is not the case, because as this candle was impulsing down here, it was just grabbing liquidity so that they could go fetch traders here on top before continuing the rollover. All right. So how would I approach this on gold? Well, again, like I said, we can look at the 4-hour breaker structure. We don't actually see it here. We can go on a lower time frame also. As we can see, after these liquidity highs were grabbed on gold, we can see how the 1 hour created a breaker structure right here. Okay, very, very complex, as you can clearly see. Breaker structure right here. This low got broken by this candle. After that, the supply areas just started becoming extremely strong. As you can see here, price tap fell down. We can go lower, 15 maybe, 5 here. But yeah, gold is extremely complex, to be honest with you. This is why I do not indulge too much with gold, but I'm trying to find if the order blocks were being responded to on lower time frames. The 5 minute that got responded to. Here's a lot of order blocks, but price is not really tapping into it. Here's 5 minute again. Oh, here was one. Here's a good one. Price then continued to the downside. Here's another one right here. Price pushed up, tapped it, continued to the downside. So you have many opportunities, right, to keep on going with the price. Okay. But how would I know that the market was selling in the market was selling in the first place? Look, the market was selling as soon as price, let's see here quickly. Market was selling from what point? Maybe from this low right here. This low. Okay. And then, yeah, massive impulse to the downside, break a structure. As you can see, the market was really struggling in this area. And then, of course, we have liquidity highs. Price grabbed the highs before rolling over. But yeah, pretty complex price action on gold. But yeah, as you guys can see, this is my video for today. A lot has been mentioned, to be honest. But yeah, hope you guys can take it from there.